Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Today, back by popular demand, we have a very special guest coming back on the show, the market sniper, the crypto sniper, and last but not least, the reset sniper, Mr. Francis Hunt. Thank you very much for coming back, Francis.
Delighted to be back with everybody. Thank you for having me on again.
Fantastic, fantastic. And the pleasure is all mine. There's a lot going on right now, and there's a lot that people need to pay attention to. So I'm hoping during our conversation, we can get into some of what that is that people need to look out for.
Oh, absolutely. And the sad fact is a lot of the most important things that are going on are not going on reported, and all the trivia and minutia is being reported. And as I was just saying to you prior to hand, it's almost like we're all being treated as these dumbed down, middle of the road, 90 IQ to 110 IQ gut folk watching Big Brother and fascinating on the character we like least and the girl we like most, who we hope wins, as I was saying to you. And it's that level of pitch that the mainstream media is providing, that when the real story is actually the normalization of utter surveillance and voyeurism of individuals, poor entertainment, and creating situations where you cause divide and conquer, and not understanding the metaphors and lessons in that. We're all just fascinating on who's our favorite dude in the house. And this is very much how I feel. I mean, I actually feel insane, and I feel like, is the problem me? Because there is something going on that appears violently obvious to me, and no one else is talking about it. And it's almost like the rest of the world's, in my world's view, ignorance or non-dealing with this fact is almost like a mass gaslighting. It's like the world's conspired to gaslight against me, or I'm completely insane. But the story, and I think other people are feeling this, it's not unique to me, to varying degrees.
Ignorance truly is bliss. I think that's, I think some people still have their head buried well within the sand. I think people are becoming more and more aware of things, but the more aware they get, the less they want to hear about it. You know, they don't want this to be what potentially it could be. So I think you're right.
Oh, indeed. Let's show you what I'm talking about, because I'm talking about the debt markets. And, you know, I was just highlighting on Twitter now, and that you've actually caught me an ideal moment, and I'm going to record a YouTube, because if anybody in YouTube is talking about it, I'd be stunned. Basically, round about here, we contradicted Raoul. We had a different view. We said, we felt, I'm putting a black box, let's make it my favorite color, as you know, in there. And we said, we think this was a slap in the face change. We're talking about debt markets. Now, I'm going to lose a lot of people when you say debt markets. We are going to talk crypto. We will look at crypto charts. What you need to understand is that crypto is a little paper folded boat on a quiet bay's ocean, and every now and then that ocean gets real choppy, and it doesn't matter what the little white, you know, paper boat does. When the waves and the tide is really punting and shunting and the wind is blowing, the macro markets, then the boat is dictated to. It doesn't matter how well it sails left or right, or can catch wind. If it could be sunk, it can be dipped, it can all sorts of things. And this is the macro markets that we're talking about. COVID-19 was a pivotal end of trend event. So this chart that you're looking at is just so that everybody understands it. It's an ETF. So that's an exchange traded fund, which is essentially an accumulation of 20+ year duration debt. So there'll be 20-year debt, 30-year debt. It's long-term debt. And this important thing that everybody needs to understand, why should you care about a debt market? Everybody understands Coca-Cola, Apple, and retail level companies that sell retail projects, and we all get that, and Bitcoin and Dogecoin, and there's a smiley dog face going to the moon in a rocket. This is all very visual and relatable. Debt markets are just unrelatable. To many people, it's just this dark black box that, you know, things happen. And there's something about it that you know is important, but you don't really understand it, so you stay away from it. The obstacle is always the way, and that which you don't understand is that which you most need to seek to understand. And I'm hoping in a simple way to give a couple of quick drop bombs that's going to take you from just, oh, I don't understand that, let's move on to something that feels familiar and safe, to at least just having a 3-bullet level understanding of why this is important and how it bears on you, even though you don't know about 30-year government bonds, 20-year corporate bonds, junk debt, and all of these concepts. The key reasons you should care are the following. We run a debt-based system. This entire Ponzi scheme is a debt-based system. The central banks create fiat, which is nothing more than paper, if you're lucky, or digits in a computer on a debt-based system. And I run a T journal, an asset and a liability, and they create new money. And one part of that is debt to have a deposit. So there's a liability, there's an asset. We are a debt-based system. And everything that gets spent by your governments, much of it has not even been collected in taxes. In America, they only collect about half what they actually end up spending. And the rest of it is debt creation. So who's buying that asset? Because a debt creation is literally a contract document in simple terms where I borrow from you 10 billion. Only this is obviously two institutions speaking. One would be the government, one would be the primary dealers that buy and or sell on to pension funds. And this is why pensions will be obliterated with the death of the pension scheme. You give a chunk of change to me, 10 billion, I go buy military industrial complex products and pharma vaccines to go mad and inject all my population. And in that, I now owe you that money and I pay a rental for borrowing that money, which is the interest rate. Monetary policy that is being determined by central banks has material bearing on interest rates paid on all debt. And the higher that rate goes, the higher, more attractive it needs to be, because the capital value is going down. So there's an inverse relationship. When everybody wants debt, a lot of demand buys it, they'll pay higher prices. Remember that debt is traded in the resale market as well as new debt issuance. So it's like a car. You can buy new from the dealer, but you can also buy from someone else. But debt, unlike a car, doesn't have a clutch that needs replacing and get old. It's a contract. It has a financial value. So it doesn't matter if you buy new or resale, you're going to get the most yield for the capital you're giving to the person. That's what you want. So the market is efficient and it gets arbitraged out. And at the current moment, what we're actually seeing is the attractiveness of debt is terrible. This is the capital value of it. And the higher the yield is climbing, the more the capital value is capitulating. And that means lots.
There's an inverse relationship between yields. Back to what you're talking about with it having to be more attractive. Your yields climb when your debt falls.
Correct.
Basically. And this is straight off the bat, brilliant stuff that we're talking about. I wonder how many people really understand the monetary system that we're living in. And we've also seen, I don't know if you had seen the Credit Suisse analyst Zoltan talking about the Bretton Woods Mark III. That's interesting and certainly something we can talk about a little bit later on.
Well, what's shocking me now is they always slowly release the truth to you. Zoltan, I've heard he's brilliant and I heard he works for a bank. But let's be frank. We and many other analysts that are not official banker analysts have been talking about a Bretton Woods Mark III moment and the failure of the whole system. All that's happened now is that people within the cartel who are employed and salaried within the cartel are now giving in lots of future detail about the debt-based system and things that us conspiracy nuts and forward-looking, future-focused scenario casting people with some vision for the future have been saying for 10 years. I almost get a bit peed off. It's kind of like, oh, all hail Zoltan. He's now saying it. Well, actually, you go listen to Mike Maloney, you go listen to Robert Kiyosaki, you can go, these are quite mainstream, but they don't get praised. It's only really relevant, and he's a hero and he's a genius, as someone working within the bank who's now saying that the system will fail. And slowly what was fringe, real fringe insight becomes mainstreamized. And now you're no longer revolutionary ideas and a tin pot hat wearer to many people. You've become mainstream. I hate being in the mainstream. I've never been in the mainstream. And what's actually happening is our message is becoming mainstream, because now Zoltan, who's inside the cartel of bankers, employed and paid no doubt very well, has been given license. Believe you me, they don't let analysts say things and go out that they don't want to have go out.
Of course,
it's kind of like a newspaper. It has an editor, and this is kind of very much allowed. So what is actually happening is they finally let in layers the truth get out from the core of the onion to the outer rings, where you on the outside finally get to see the color of money. Well, let us say to you, and I was just sharing some images, as I was saying, on Twitter, on the actual debt markets. Here is the yield on a 10-year treasury, for example. And this was Paul Volcker, the Fed of 1981. This was peak gold and silver era, which is something we can also touch on coming. And the rates were high and inflation was high, but the rates were really high to rein back inflation. He squeezed and caused great pain in America, that even farmers were wanting to come to New York, which is very much a French activity, in their tractors. So America actually got that far, and he was doing his job. He was grabbing the punch bowl and said, no, you can't have another drink. In fact, I'm taking it away, the party's over. And he did it for a sustained period. We went into a 40-year. This is a log scale. You can see this is a huge relative capitulation from the 19 rally and then down. It's kind of tough to see. I should maybe see if I can make this a little bit bigger. And I hope I'll be able to get out of it again. But you are here, essentially. This chart I did in November of 2020, and I was highlighting that is a final capitulation. It's a bookend of error for downward swinging interest rates and upward swinging capital values of bonds. Everybody thinks BTFD is unique to the stock market. Bonds were the ultimate BTFD. I have a brother who's been retired for a while. His entire actuarial career, and then as a fund manager in the city of London, where he was net long bonds. His entire career, literally, and it has extended long after he's finished, literally to 20. This has been a huge, you're talking about 41 going on 42 years. And I say to you that March 2020, that final capitulation, and technical analysis is very clear on that. Yet no one did anything on this. I'm the big Cassandra of the financial realm. I'm not in a bank. I don't have Zoltan's scale of megaphone where everybody sits up and listens and says a genius has spoken and is approved. 2 years ago, virtually, we said that is a final capitulation end. This is the beginning of the end of the debt system, because we're going to reverse yields from what was near zero here. You're at about 0.4, and we are going to continually go up until failure, and it comes long before you ever get a chance of getting back up there. Why? Because the sensitivity to debt volume that has been built up during this cycle is too vast. So it's kind of like sailplane gliders. I don't know if you know this, but they actually can put water in their wings to build ballast. It makes them heavier, so that if you have really strong lift, you can lift a much bigger, heavier weight in those really strong thermals. And then when you fly to the next thermaling area, you don't drop as much because you've got all this momentum and speed. You quickly hold a lot more height. So you're taking a much heavier thing up higher, you get more natural momentum going forward. And then if you're in light lift, you can open the plugs and let the water out, and you can scrape a lot easier as a lighter plane. But when you're in super strong lift, you can exploit that and make it really lift you up. Now, we've done the inverse of that. We started light, and we raised our poundage and weight as we scratched ever lower and lower. So now we are the equivalent of a lead balloon. There's no flying back anywhere near to the previous heights. There's not that level of strength. There's not that level of interest. We are in reset of a debt-based system. Yeah, and it is happening. And the COVID-19 was the book-ending final capitulation event with regards to that.
You used the analogy last time you were on the show of somebody putting their hands into a sweet jar. And correct. The problem that they've got now is their hand is too crammed full of sweets to bring it back out. And I thought that was a brilliant way of explaining it. And on Zoltan's point, I think you're very right on that. You know, it's always these kind of mainstream people that, you know, give you a snippet just before something's about to happen. Whereas just like reset's another thing that you've been talking about for a long, long time. That's now become a very popular term that's being used, even by the World Economic Forum. And it's like, well, you know, hang on a minute.
Yeah, these guys that give you a snippet of information that is almost stating the obvious to many at the last hour get heralded as the heroes and the great insights, forebearers of insight. We call this a very strong ascending. This is on the 10-year. T-notes future to be a downside break. It was 2 or 3 months when no one was talking inflation. It's very easy now to look at inflation and say, it's an easy call. It was an absolute deflation shock. Nobody was making any money. Lots of people were going unpaid. Some people were on partial salaries, furloughs, all of this. Stimuluses hadn't been granted yet. The 7 trillion hadn't yet been granted. This was all to come. And this is a call on that 10-year. Now, if we go to that 10-year and we have a look at all of those, very similar. You're essentially here, the equivalent of here. All the debt is behaving in very much the same way. Now, this is a macro head and shoulders. I've yet to see 22 months going on 2 years. Anyone else who's posted this head and shoulders on a capital value of debt. So let's be clear. This is what makes me feel I'm a lunatic in a lunatic asylum, and it seems too obvious to me, and I must have something wrong. I feel like I'm being gaslighted in my opening statement to you, in that we run a debt-based system. No one is watching the debt markets. The World Economic Forum is talking about reset. What do you think they're going to do? They're going to kill the debt market of the debt system. If you're riding an old aging donkey and someone's ponying up next to you with a spare horse, they're going to let you ride it into the ground, the one you're on, and just before it dies, you're going to have a bit of parallel run period, and you're going to hop off the almost dead horse onto this fresh steer, or better still, pony that they brought along for you. And it's going to have all the features they want it to have. A tracking chip, mandatory, this and this, UBI for everything. But hold on, what happens to this debt that's going to go, in my opinion, to near zero, be squared over into some fancy, my guess, hyper dodgy altcoin on a blockchain, UBI related, compliance criteria related, etc., central bank digital token roll up, do this, do that. Nobody talking about the asset class upon which the entire financial system is breaking, yet expecting resets and not expecting it. Here is your big short. I don't hear a single retail trader that says I'm short iShares 20-year Treasury bond, and I haven't put a foot wrong since this right shoulder broke. You could have, by the way, our first call was when we contradicted, we said we had a different opinion to Raul over here. We thought this was the first inverted HVF in a new trend. This was a slap in the face event. It was too sharp and too brutal that came in there. It's a technical element. We see it as a clear technical event, a real harsh slap and a rebound. And guess what? It came back to this 135. We said this 135 will be a key level. We think you're going to trade all the way down here. We made that inverted HVF's target over here. We then had the rally for the right shoulder. There was a grind line here. You had a new chance to get short. So let's be clear. There's already 3 substantial hold for over 6 months, 9 months, a year trades that have all performed short here, yet no one is still talking about the big short that is the debt markets to zero, in my worldview. Absolutely. And I don't understand it.
Fascinating. I mean, this is so crucial. And when you talk about, you know, the new system that they're moving towards, isn't it interesting how BlackRock have now become the main custodial for USDC, which is a stable coin essentially? You know, you can already see the sheep herders herding the sheep right now. You know, that's what's going on. This is fascinating stuff. I mean, this is alien for most people.
When you talk about BlackRock, you've got to remember that Goldman Sachs was behind Circle and the USDC. So that is literally one arm of the octopus passing it to the other. Yep. It hasn't even changed custody, really, in my opinion. I see them almost synonymously as one, but it's very interesting as who's holding the ball, which tentacle is holding the hot potato at this moment. But you've already had 2. So the point here is you've already had 2 mondo shorts. And this is, in my opinion, 2 next to zero. And this is your state-based pension system that is based on debt. And they're going to say, who'd have thought it? It's a black swan. Debt's really lost value. All your pensions were tied up. We had to buy debt, because officially the narrative for why someone would actually invest in debt, because you've got to ask the question, who up until now, given that we have this endless supply of debt, who was the idiot buying it? even up to this point. If you're asking a logical question and you sit with pension funds, every single person's salary has a deduction if you're in a job for a pension. Pension funds have mandated rules in some instances, varying by country, that says you must invest in interest-bearing, highly secure backed assets that are very low risk of default. That is how they've been sold. Governments don't go bust. Yes, little Joe Soap's business might go bust. You can't buy shares in his business. You don't do equity. That's too risky. Apple, it's still an equity, even though it has a massive yield and is a cash generative dark state entity that makes open-ended money and probably will for an extended period. No, you must do the safe thing, bonds, you know, and they're called gilts in the UK. I know you're in the UK because it had this gold edge on the certificate of lining. This was gold edge. This is how it's sold to you. It's irrefutable. It can't die. And governments will just raise taxes. They'll never die. Unfortunately, they'll die too. All fiat systems end up failing. And we're in a global synchronized fiat system failure, which is actually a debt narrative. And that's what crypto folks don't understand. And this is the big short. And I'm watching this thing throw it down. I mean, it's opening on gaps. I thought maybe we'll at least get a little rally to the neckline. I can load up some more. Not a sausage. Are we getting back up to that 135? This thing is already 40% on the way to its first official target of 100. We were calling the short at 180. Now, many people, 175. And many people go, that's not much. You've got to understand, that is a huge move in bond markets. Bond markets are like the sleepy tortoise relative to FX markets. And the other thing, having brought up FX markets, is they overlay each other. They absolutely have lots in common. In short, if we're looking at a beauty contest on FX, and we're talking a lot about traditional markets and not about crypto. We will get to crypto in a minute, but if you don't understand what's happening outside your window, you're not going to understand what could future happen inside your room, where your cryptos are holding. And at the moment, you have a beauty contest. And one of the big elements for me as to who are the pigs in the room of the equity is high relative debt. Japan, when you do visualizing debt, they're probably more honest than America. But when you do the visualizing debt, you'll see Japan 257% of GDP. That is mondo big, as you can well imagine. And as a result, they are one of the worst in the debt to GDP level, mostly because they hit overinvestment and max margin and crazy town while we were still learning what a pump and dump scheme was. Imports, commodities, and energies. Oh dear, big problem. The big trade is long commodity energies, short debt. I've been saying this for months and months and months. The big trade. And many people think, oh, you were the guy who called oil short to single digits. And I said, you got half of the trade I gave you. Because during that period, the relative valuation of gold to an oil barrel was at all-time lows. I said, go long gold. You were getting gold at 1,300. You were getting it at 990 pounds an ounce. We went all the way up to 2,000 in dollar terms and up to, I think it was about 1,600 in pound terms at the same time that oil went to a single digit. I gave you a long short trade.
I can attest to that.
The long short trade.
I can attest to that.
Yeah, the long short trade of that. Of course, everybody remembers the oil because that was huge, but actually you could have been doubling up on that with the other leg. And since then, after it met all our targets, gold went into a pullback and a gestation period that's gone on for 18 months. And now you're in the new trade, the long short trade that is essentially delta neutral for you, is short debt, long commodities. And the debt market is throwing it down. And you can go and buy an ETF in a commodity with energies in it, or an agris only if you want. I would certainly have the energies in, and you can go and short sell an ETF on bonds. I go to IG. It should be the most traded thing. You can trade this thing. Many people go, but oh, I can't trade it, therefore it's not interesting. You can. You can go to IG markets, CMC markets, any of these guys. There's a market on the iShares 20-year Treasury bond. But no one's doing it because it's an institutionally perceived asset class by people who understand the running of the system. And retail has intentionally been kept in the dark and dumb on debt In the same way at school, they don't teach you about financial management. They want you to submit to an advisor who will sell you a policy with an endowment, and you'll end up in some portion of debt and some minor tracker to some equity and getting a moderate return in good years and actually going backwards in bad years and actually compounding a pretty crap number. And that's what they want. They don't want you smart. They don't want you smart. They don't want you too smart. They want you useful, and they want to harness your energy, and they want to extract off you. When you get old and expensive to keep around, they want you to turn your toes up like a good boy so that they can do the same to your kids. And that's essentially the system. Sound kind of cynical, kind of jaded.
No, I think you're spot on. I think you're absolutely on the money there. And it was John McAfee, and many other people have said this, but he was a big believer that you're linguistically programmed from the time that you enter the world, really, to play a role in the system, that it is basically kept up by us and our naivety. And I think you're absolutely on the money there. And this is fascinating, because when you're talking about debt, you are talking again about the very thing that the economy is based on. And the end of this, I mean, who really knows what that potentially means? I'm sure you've got ideas on it, but it doesn't seem like a very easy period for anybody, I don't think, unless you're equipped.
The failure of the debt system is going to lead to huge ructions in the FX markets. You're talking about the two biggest markets. And one of the reasons why I brought FX into this is that you're going to see the runaway weakness in the Japanese yen. They have yield control, curve control. And let me just say, they always use these fancy words that make it sound like, ooh, the Fed has a new tool. No, it's not a new tool. It's the same old tool. It's always been tool. It's wasting money, proliferating money, and choosing how they allocate it to hold up an asset class that is totally toxic, that should be allowed to fail. In other words, by buying their own debt, they create a false bid under a market that is actually hopelessly oversupplied and should be allowed to die, and is deeply toxic and should be paying junk plus levels of yield for you even to contemplate holding it. And in my opinion, will probably still go to naught and wouldn't even be a value by 25% up. And that is throwing good money after bad. That is the classic end of corruption scenario, where it's more about maintaining the system, no matter how bent and broken it is, until everything financially collapses. Because nobody is prepared to do the transition themselves and be the guy who gets to carry all the bad news. Because most of the 90 to 110 normal curve will say, oh, you're the Gorbachev of the system, you broke Russia, and or the equivalent of you broke the financial system, because you admit to all the errors of the lineage behind you. You don't want to be the guy that pulls the plug, because it's all going to be hardship and it's all bad news. So we've got to have events. We've got to let them play their form of theater that they're going to put on for it, for which you actually bit part players in the wings, like like an extra in Mission Impossible. You're going to be the dude that crosses the street with his son, and the guy walking the dog that goes past Tom Cruise. You are literally bit part players in a much bigger production. Unclear or low cost, low gold holdings. To me, America falls into the category of unclear on gold holdings. I don't believe a freaking word I'm told by any politician or any federal person, and they wouldn't be sending gold bars to China and Germany with tungsten in them and being caught out if they had so much gold that they could be honest brokers. Low gold holdings. Well, good old UK, you can look at Gordon Brown, who did the maths jump and got rid of most of Britain's holdings, 400 tons of gold. That's quite a bit.
Was that at the low as well? Yeah, that was at the low as well, wasn't it, for gold?
Oh, so he sold the gold, Brown's bottom,
unbelievable.
We call it. It's a convenient use of name and color. But that really was, in terms of trading, shit trading. And he did it. I'd love to know who was the name on the clipboard that got changed from citizens of UK sold bargain basement price to whom, I may wonder. I'll leave you to speculate on that, but the name on the clipboard sure changed. Whether it moved out of the Bank of England, I seriously doubt, but you got to think who owns the Bank of England. So you look at lower relative debt, Russia at about 17.9, the ruble could actually become a king currency. We called the pop on that because we had the HVF, but we said, get out at target after your overperformance. Exports, commodities, and energies, gold holdings high, and a small producer as well as a big producer of platinum. You know, outside of South Africa, Russia is the biggest producer of platinum. So this is relative strength. So these debt-based problems that are variable, so it's now how ugly is everybody? They're all toxic to a degree, and you have to choose a beauty queen in this leper colony of beauties to be your wife, and they're all radiated. And some are hyper radiated, and some have just a minor level of radiation. You're going to choose the least ugly of the lepers, basically. And the debt is the degree of radiation, almost certainly. China, that's a kind of high debt, but is at least dealing with their property. They haven't bailed out on the property more recently, and they are huge. They will be the biggest gold holder, and they're a producer. So actually, the narrative of the yuan being weak and not highly utilized. Watch how that changes. I don't know if you saw Sri Lanka. So the other thing that happened today, Sri Lanka's currency absolutely moon spiked against the USD dollar. That's in weakness. It's a plummet in value on the USD KLR. And they're, of course, Chinese, probably most prolific known 100% economic hitman scalp, which they learned the trick from America on, lent them money for bad projects, corruptible politicians who bankrupted the country. Now China essentially has an aircraft carrier just off India's waters, which is kind of handy, and that they essentially own, and the Sri Lankans are indebted on them. And this falls into our scenario of how there's too many FX currencies. According to the world leaders of the world, there's too many currencies in the world. So they want all the small FX emerging nations to slowly collapse. This is our theory, our hypothesis. This is speculation on my behalf, but you've already seen the lira shoot. That's not a small country, but it's an emerging one. You're now seeing the likes of the Sri Lankan, rupee, all of these things. These currencies, these are who I call the poor peasants that live outside the city walls in terms of the currencies. They're the first to be consumed by the attacking hordes. And consumed they will be. And then the horde will come through the walls, and each successive wall they break through, you know, the king, which is the dollar, is in behind 3 walls inside, and they'll have to beat their way through the knights and the infantrymen at each successive level further out. And this is the fail from the fringes, the Roman Empire falling from the fringes. You know,
the dollar milkshake theory is kind of what we're talking about here, right?
There is a bit of that. It's failure. I don't know how much Brent Johnson gets into talking about failure of FX emergings. That's very much more our narrative, but he certainly talks about the dollar going up. The one thing I will say is the dollar isn't the most beautiful. The dollar index has gone up and has run the 100. As we predicted on the inverted head and shoulders that we've been discussing for a long, long time. And that's another reason why Bitcoin has had a tough time. I just reminded people about that. In benign markets where there's no real super driver, Bitcoin is measured against the USD, and it's king fiat. We called Bitcoin and gold and silver the anti-fiats. If the king fiat is having a strong period, it's countervailingly a headwind for Bitcoin. And this is, in essence, what we've been getting. So it's been hard ground. It's been churn and chop since the 69K. And we've shown even against the NASDAQ, when we look at Bitcoin NASDAQ, in fact, the 69K didn't make a new high when you divide it by the high beta NASDAQ stock index. So the real high was the 64. That was your first cup gold nugget. And during that whole period, that was the period when the dollar index was collapsing. So let's just show you those things in the charts, because that's also interesting. But remember that dollar index is a measure against the euro, the yen, and the pound.
Yeah,
57% euro.
Yeah, I was going to say.
That is the dominant holding. Yen, 13%. And then 11% the pound. So you're at 82% on 3 currencies. And the only commodity currency that it is being compared against is, in fact, the Canadian. Now you can see you've broken this 100. It's been super strong. To us, this was your funnel over here. That was your go long dollar and be short. Euro, Swiss franc, Euro, USD. And we're seeing the Euro, USD make new lows. We've called for parity. And we've called for 110 here. On here for this to be run on this setup over here, essentially. So wipe the face there a little bit, that squeeze. So the macro markets are driving things, and you get up to 110, 111 range, and as I say, there can be overperformance to that, you're going to be talking about a euro that is largely in massive trouble. And the euro is going to jump the queue of some of the FX emergings, the small FX emergings, because the rand, the Brazilian real, they have commodities now. They're badly run, they're indebted, sure. But the flavor now is the macro, and it's commodities. Rand's gone from about 16 to 14.5 against the dollar in a period that the dollar's been killing the euro and the yen particularly. So the two most indebted macro currencies are the euro and the yen. And our shorts, Aussie yen, euro USD, those are smiling and just keep giving. The best trading markets have been away from crypto into the macro, but the macro will spill back into the crypto. The notion that you should be trading every day, all day long, because you're a crypto dude and you're crypto trading is like saying, I live in this silo and I will never travel elsewhere. And you've now eaten all the grain in that silo and you're now picking up earthworms in the bottom there, trying to give an existence, and there's another silo along. You just have to open the door and go in there, and there's an absolute feast awaiting you of good to go, ready macro trades. Everyone in retail trading land should help end the Ponzi scheme by being short debt right now, and should be long gold and silver right now in physical, and long currencies like the ruble. Yes, you heard me say it. The dollar against the euro and the Aussie against the yen. They should be shorting the hell out of the most dangerous debt. Build your wealth in the failure of a debt-based system, which is reflected in the currencies where the relative degree of leprosy of these horrific beauty contests of the most sickly, radiated nation currency states is the currency, and debt is one of the most critical things. These are your macro markets and these are your plays, and these we've been nailing it here, and we got Bitcoin wrong. We thought the most recent move should be down, and the Fed was so benign in chasing inflation that actually they indicated, in my personal opinion, benign neglect. That we talk tough about inflation and we do very little. Yeah. 1/4 point. When you're only on 1/4 point and your inflation rate is 8, officially 16 at Shadow Stats, that's, as I say, ambling after the bullet train that you've just missed on the platform and then stopping and having a coffee after 3 steps and expecting you're going to catch it up. That is benign neglect. It's, yes, I'm going for my train, knowing you're never getting there. Yep. They have missed this inflation absolutely categorically. It is a runaway. It needs to be killed small. And the only way they can bring it back is to destroy all form of demand for all goods and items. In other words, stop you from driving your car. Literally what happened in CV19 is the only way they can rein back any form of inflation. Yeah, because they literally have to kill demand.
A deflationary event, yeah, absolutely. And we spoke about that last time. Everything that you're speaking about is absolutely fascinating. And it's less than a token gesture what the Federal Reserve are doing, and it's almost like, well, are they doing this on purpose? And they're going to have to kill demand some way, and I think an event is going to be what does it. And yeah, this is all so relevant. And when you talk about the crypto market and you talk about how you've actually seen strength, I'm a little bit disappointed with how crypto has acted at the moment. Certainly, it's rather ironic that Bitcoin, a great inflationary hedge, hasn't really been that recently, and yet is driven by the institutions over at the NASDAQ and, this sort of thing.
So let me give you some encouragement then, because I parts agree with that, but also you have to take it into context of what's happened. So crypto encouragement. We were at 10K breaking our first cup gold nugget to the upside on crypto when we were here. 10K. That's where we were. You go check that out. That's 2020. I'll split the screen and I'll put the two underneath each other for you.
Yep.
In fact, let's do that so that everybody can follow at a macro level. So I don't say the dollar performance is the sole thing driving crypto. It isn't. I don't want to give that impression, but it is a major when there's not new specific drivers. It is a major one. So if we just get BTC up. Now, what I'm going to do, the FX markets only trade 5 days a week. So I'm going to put in the BTC futures market, which is similar. So you're getting the same thing here. We're at 39,755. That is awful. Sorry for all those suffering. It's tough, but you know what? It gets better, and you get more patient, and you will learn more. Let me just make sure I get that. So what am I doing? I'm just taking the dollar index. Let's get that 2022 over there. I'm lining them up. I know somebody told me there's a better way I can do this, and I haven't tried it. I haven't sorted it out. But anyway, there you go. That 10 seconds that you'll never get back of your life is now done. If we just have a look at how Bitcoin's performed. This was the spike, and then the first inverted HVF in a new trend that saw the dollar be killed. So during this period, the dollar printed 7 trillion, the euro was reinflated, and the dollar was in descent. Down, 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 down to here. What was crypto doing during that period? That was the break of our inverted HVF. There you are, May lined up with May. You see what I'm doing? May, that's 2020. Yep. You started to get a little bit of momentum, slowly at first. And then you really started to get going here, late into the dollar. So there was a heaviness to crypto. A lot of people were disappointed by this capitulation that actually ran 4K. There was a lot of burnt hands. So it takes a while for people to cotton on. So there's a delayed effect. But first low, we've now got running. We're already here. We're at 39,000. Then dollar goes up for a while, you get your first pullback, falling wedge. But now everybody's pumpermentals, Bitcoin's starting to hit the Google search highs, we start climbing. Now we're actually climbing for a period, even with a little bit of dollar climb. So for a while, they're both going up there. Dollar down a bit, but suddenly we start to slow. Dollar down a bit, we actually had a breakdown, and even the dollar index was coming down. Then the dollar index bottoms again. Now it starts to run. First major pullback all the way into a low there. Dollar is up. Then we got, no, it's all going to be fine. Falling wedge. We get a period where dollar and Bitcoin both a little bit up, but dollar was kind of sideways. Then a little bit down. Then we started to get dollar climbing. We still had a bit more climb in us, and then the dollar kept climbing right the way up to highs here. By that point, Bitcoin can't stomach the strength of the dollar. It's selling off. Dollar is continuing up, continuing up, continuing up. Bitcoin's down, down, and in a bear flag type structure right here at 39 as the dollar is pressing higher. And for those of you, we ran the 100, we did about 100.5, and then we pulled back, and Bitcoin started to get a bit of a rally at the base of that bear flag. What's happened? It's decided it's going to do a little more to the upside. So I'll just pull them in line again. And we're actually having for this week a bullish day, and we're at 103. So we're back up again, and we've tested up there. It's leaning on Bitcoin. You see this entire period, Bitcoin wanted to get going again from that low, but it encountered dollar doing that. That's been a selling force across the top here. And if the dollar continues higher, we fall out the bottom here.
Yeah.
And that's pretty dull. And literally this high dovetails with that. You had a small pullback in the dollar and you went higher, and that just kept leaning on Bitcoin, kept leaning on Bitcoin. So there's sometimes a little delay. Once people get bullish retail, they're not thinking, hey, the dollar's getting up, I'm not going to buy. As long as Bitcoin's moving, they'll feed on. So you get these lags. So it's not perfect top every time, but you can see the bottom here on the dollar around about there. Then it started climbing again, Bitcoin back down into lows. So now Bitcoin is struggling in a firming dollar environment, and we have invalidated that bearish setup. Not invalidated it, but taken it back. But you've got to remember, you were 10K here.
The charts go hand in hand. I mean, there's a clear adverse correlation there for the most part. What do you think? Because one thing that I've been paying huge attention to is the relationship between Bitcoin and the Nasdaq. And they're both, if you look at interest rate hikes and them getting priced in, to me, they both seem to have been killed off killed off is not the right word, but they've both suffered at the hands of interest rate speculation. That's personally what I think is driving the current market. Do you think we see a decoupling of Bitcoin and the Nasdaq? Because for me, that's something we need to see. For me to sort of, because I think a lot of the risk right now is to the downside for BTC. That's my personal bias. Short term, long term, I think we're going to do fine. Short term, I'm worried that we have this correlation with the equity market, which is so schizophrenic based on the Federal Reserve, really, and them setting interest rate. I think the market's priced in, I think it's 1.67 or something percent interest rate hikes. What happens if they start ramping that up and getting a little bit more hawkish and throwing themselves around?
Well, they have started getting more hawkish. The biggest dove has said they're 300 points behind where they should be. And in my opinion, they are. So small point of interest. This isn't just about America. So we talk a lot about the Fed and America. Just to give you an idea, in the why I talk about it's the relative degree of scab on your leprosy beauty queen. The Europeans, the last time Germany was at 7.8% inflation in the late 70s, their interest rate was 11%. Today, it's 0, not 0.25, not recently bumped up to 0.5, it's 0. So we're talking about the least ugly leper. That's why I keep using this analogy. They're all pig ugly, but in a currency sense, and who fails next, the very ugliest, most sickly will die before the slightly less sickly. You know, even having one eye, which is quarter-sighted in the land of the blind, does still make you have a relative advantage over your buddy in a fight. Because at least you'll have a sort of notion as to where he is, where he had no goddamn idea where you are. And that is the European position. They are the pig ugliest in the lot, because they are talking about tools for managing the debt market. All that means is they can't afford for the debt market to fail. They're going to kill your currency by adding further proliferation to buy and support the debt market. So you've got to see the relationship of FX and debt. To support debt, you kill FX. And this is what's happening with your FX specifically. So the greater the nation state is doing yield curve control, basically it's buying a toxic asset that is near worthless to sustain its valuation so it can manage an interest rate. This is the perversity of the system, to manage a low interest rate so it can continue to pay the interest on the debt it's already sitting on. And doing that, you kill the value of your currency. And if someone else is even more indebted than you with 273%, like Japan, and can't for a minute seriously ever pay a real rate, this is why there is no savings. And this was the point I made in a Real Vision recent appearance, where I actually said there's no real savings. Postponed consumption is not rewarded. It's not rewarded in a bank savings account. In short, there is no point of having a bank savings account. You'll get 0.25. If you borrow on your credit card, it's 16%. So for the peasant in the street, which is all of us, there's a bid and ask spread of 16 and 0.25. Borrow at 16 on your, well, look, there's more efficient ways than your credit card. Okay, your home mortgage on a secured asset, that's getting a bit more clear. They own the property then. You don't own the property. If you're just borrowing and the security is nothing more than you and your word and what you own, it's kind of like a credit card or a personal loan rate that I look at. A mortgage, basically the bank is buying a house and letting you live in it. And it only becomes yours when you remove them off the title deed. So I don't look at mortgage rates, but even at mortgage rates, you're almost 5% in America on a fixed 30-year term, and you get paid 0.25. That's your bid-ask spread for the average man in the street. If you're a billionaire and a bank wants to get out billions that it's been given by the Fed, it'll lend it to Apple at next to nothing and give them 10 or 50 billion and get a massive loan book out. They have one client and they give it to them for next to nothing because it's secured against a highly income generative corporation. And actually, they've done that with very poor quality corporations as well. So you have the likes of a failing IBM, you have the likes of General Electric, which are horrifically over-indebted, that are this huge shelf that are currently rated one level above junk. And pensions, that is what you're sitting in, what governments are taking off your payroll every month in the name of your future, are being wasted because they have mandated you can't invest in junk debt. And many of them have purchased, when those companies were bigger and better names, their corporate debt, and they've continued to get more corporately indebted. And what's now happened is, but the yield that they pay has always been managed down, even though their risk has gone up. So you don't have a true risk underwriting related return when you are in the debt market. So the debt market has been corrupted and spoiled in the traditional world. Amazingly, when we bring this across to talk about crypto, we actually have a fresh new price discovery mechanism on your USDT and your USDC if you stake it. And there are some options. I'm not up to date with what's the best rate you can get on a stable coin.
You can get some pretty amazing rates. I mean, I'm getting 20+%. I think on Anchor Protocol, just on a stable coin, USD stable coin, I'm getting about 20%, which helps. It's certainly better than sticking your money in a bank account, that's for sure.
Well, it's phenomenal compared to 0.25. You're talking 0.2. Essentially, you're talking 100x in yield. So what you actually have, it's kind of like I've taken the fish tank that is the global financial systems, all of them in one, and I've put a glass divider down the half, and I've created a long-term, I've filled with water, the left-hand side, which is your long-term traditional markets. And I've perverted that so much that there's no yield being paid. And now we have a parallel universe, or not so parallel, still part of the bigger system, but is not the banker orientated system officially anyway yet. And you're getting a hyper yield on that side. So what actually should be happening, so as Demartini, who I interviewed, is whenever you suppress in one area, you create an imbalance and a hyper overreaction in another area. You don't make something go away. You push it down in one area and it pops up somewhere else. It is literally a game of whack-a-mole. A concept that is designed into you biologically doesn't get suppressed away. It just manifests in a different way somewhere else. And that's a little bit of a cheeky example that I give you. But in essence, many systems work like that.
Yep.
You know, if you just bite your bottom lip and never answer back, you're going to be the guy who shoots a clock one day.
Of course.
Because you're emotionally restraining yourself, or get stress, or get some sort of therapy required because you know, so any point where you do not allow some degree of natural release and you don't find some balance and get some centering, you're going to create an energy that needs resolution. And that occurs. So here we're talking about monetary policy, and I'm busy telling you that they've destroyed and perverted it by supporting a debt system, by killing the currency to support a debt system to maintain a low interest rate in one perversion of non-market natural market forces, where you find price discovery, where you have a big player with an exclusive license that can do perverted things. And so then you could get inside the same tank, because water normally finds its level, but we put this divider in, all the water will run into the area where it's properly rewarded, because money always finds its level like water. When the water finds its level in the traditional system, before it even gets to finding its level, you have a complete breakdown. Yep. Because they can't pay the debt. The Japanese can't pay the debt. That's why they're doing yield curve protection at 0.0%, because if it goes to 1%, it's already half the budget to pay on the existing debt. That means they renege on all their pensioners, their aging population, etc.
We had something very interesting talking about stable coins and some of the yields you can get. There's quite a few out there. Anchor's one. You've got you've definitely heard of Crypto.com. And you also had Celsius. Now, Celsius, I think, were offering, I can't remember quite what the APY was, but it was a good APY on stable coins. And the SEC essentially came in and said, look, not for our citizens, guys. You can't be, we're not going to allow that. I remember that.
And I did a Reset Sniper video. Those come with a small LBC. You have to buy me a coffee if you want to watch those. They're on the Odyssey channel. But apart, you won't spend more than $3 or $4 at tops, I promise. And you'll support centralized video. I remember that. And I pointed out the attack vector is two things from the existing traditional market. They don't like stable coins more than they've actually worried about the high beta of something else, because that's like an equity or venture cap tech stock. They've got plenty of that. They're used to dealing with it. They just don't want it to be a security, ergo the Ripple case, which is probably going to fall apart because it's been terribly pursued and it's quite random who they seem to have chose. But anyway, that point aside, they don't like you offering an alternative monetary system where saving receives reward. So that very principle that I was referring to, because I made that analogy for that video, that's why I just sort of pulled it from the library, where you create a secondary monetary policy system where savers actually do get rewarded for saving and come out, you start with 5 and next year you go in with 6 at 20% per annum. So if you put 5 million in there, you pick up $1 million in interest over a year. It's pretty good.
You can live off
a nice penthouse with that.
Yeah, you can live off it.
So the point of that is they don't like that because you are undermining the perversion they've created in the main system, which is a suppressed monetary policy system where they force you to either be in high risk investable assets, which are not overtly stable, or if you're in a stable currency system, you get shafted, where you pay you get paid 0.25, but if you want to borrow, you pay 16. Or if you're very good credit risk, you might get 12 or 10 on a credit card. I don't use any credit at all, so I don't know. I'm not the best on these numbers. As I say, property is actually a different risk because they actually own the assets. So you're just really a different form of tenant. Unless you're putting a very small mortgage, and even still, they'll still own the property to a large degree until you pay that. So it's a different thing because they secure it on an asset. So yeah, this was just another chart I'd done for the Dixie Bear. It just highlights this point, and I'll leave this particular point. We can move off, but you can see that was the dollar index bear, and that was the Bitcoin bull in a very granular sense. Then you got some churning and bottoming and sideways, and you've got some churning and bottoming and sideways. Now you've got dollar bull. So when you say it's been disappointing from Bitcoin, you're right at one level, but the other point is the dollar index has gone back to where it once was. As yet, Bitcoin hasn't gone back to 10 grand though, has it?
Fascinating. Yeah, I never actually even looked at it like that. I never even thought about it like that. You're absolutely right there.
It's been enforced into a consolidation in and around the 29K to 69K range at the broadest point. I think we're at 29 here. I think we were in the low 30s there. So you've been pushed into a form of structure that technically, and as a technical analyst, I'm always happy to analyze. But in actual fact, you haven't returned to source when the dollar index has actually returned to source and bypassed it. Because our break point was over here, at this level over here. And you're actually higher on the dollar index. And dollar is the king beast at this point. I think it's going to beast a little more, but there will be a flippening moment, which will come on the debt crisis, when even if the dollar goes up against the euro, the yen, and the pound, you'll have commodity currencies that it's not measured against doing better. And you have the debt continue to fall. Bitcoin will eventually start to go up again, in my opinion, even in, and that'll be a kind of flippening. Because as you can see broadly, if I just deal with it very broadly, the consensus lows to 64. It's quite clear the highs of the dollar to the lows. It's quite clear that they comply. Then you get your kind of double bottoming sideways movement, a bit of a range. You get your 69, 64 up and downer kind of a range. And then as we've moved up, you've been hanging on the low end, but you've not gone back to 10K.
Yep.
You're at 40.
I've never looked
actually
at it like
held
that.
on to a 4X during the tailwind period and now the headwind period. So Bitcoin is still a macro bull, but can it hold on? Will it need a little bit of a lower dip? If this has a blow off acceleration, you could get a fake out dip that takes everyone down a wee bit. That will get everyone's heart broken. Then you get a bit of a rest on the dollar index, you'll rally. Maybe that's what can happen. But the macro is still a bull. And don't forget, the dollar index isn't the perfect measure. It's a measure of the failure of Europe and Japan against the dollar. And eventually all of them fail because she's still got leprosy, the American girl. It just takes, she'll just die a little later. She's not as infected. So they all will die, but it's a measure for now.
So Francis, we've spoke about so much in this video. Do you want to let people know where they can find you? Of course, I will leave all your links in the description to your website, your social medias and everything. And of course, your YouTube channel, which is well worth subscribing to.
Yes, thank you very much for that. So the key areas to follow is the YouTube, the Market Sniper. You can also follow on Twitter, the same name, at don't forget the, it's a single S, Market Sniper, and then at the Crypto Sniper. And that is a YouTube as well as a Twitter handle. And for actually getting a little look about what we're about, we just had an amazing event, met up with our community members. I've actually been and stayed in some of their houses. Many of them have reset prepped as well, very well. We're talking about defending what you have, getting things out of your name into foundations, lots of other concepts that we haven't touched in, which are a little bit more reset. The reset is on the Odyssey channel only. We got warnings on YouTube, and I didn't want to damage the other two channels. So we're on Odyssey there. As I say, buy us a coffee. I think you won't ever pay more than $4. And you'll get my current thinking on all things resetty, where I can talk unhinged, which I often do. And we're glad to have you in all those places. Go to the website to find out more about us. That's where we book a call. Costs nothing to chat. We also have a self-study area at a lower cost option, so it doesn't have to be big money. You can engage with us at many, many levels. Go to the website, have a chat. You'll talk to someone like you. We don't employ anyone randomly. All our people that work with us are community members, and they're happy to reflect our community, and they're happy to help other future people join the community. So you can ask them about their experience in person as well, as they introduce you to the product offerings and what we typically get up to.
Francis, thank you very much for coming on. Guys, make sure you go and check Francis's links out in the description. It's been an absolute pleasure as always, and hopefully we can speak to you again. Thank you very much, Francis.
Absolute pleasure. Bye-bye. Thank you.